No, not really. Um, I don't invest in many stocks long term. I've made a few investments: Amazon, Tesla, Robinhood, and you don't need many winners to make a portfolio over the long term. But yeah, I make high conviction asymmetric bets on technological themes. That's like sort of what I try to do. I'm not always right. There are a lot of stocks that I don't hold for many years. In fact, probably most of the stocks I buy, I don't hold for more than a year or 2 years, sometimes even just a couple of quarters. But there are a handful, and Tesla is one of them, that I buy and just hold through all the volatility, through all the noise, throughout the margin fluctuations, EPS fluctuations, and so on. And you have to do that if you want to be a long-term investor in anything, especially in a technology stock. But it also comes with being a realist and understanding that there are periods of the business where the core business might not be as attractive as it was in the past, and there are periods of transition in the business, and there are periods of margin fluctuation. You have to know this through the process of experience to be okay with it. And that's why you get a lot of people, I think, that overreact to volatility, or the stock goes down 30% over a couple of months. And then they start saying, like, is this ever going to work? Or, is the story the same? There's this great quote in Investing and Trading, which is one of my favorites, and I repeat it all the time, but there's nothing like price to change sentiment. And there really isn't.
Yeah.
When the price is going up, everyone becomes a believer, and the light at the end of the tunnel gets a little brighter. And when the price is going down, it becomes easier to raise questions and wonder if everything's going to work out. But really, I think if you just stick to the things that you think are going to win in the long term, and you stick to those themes, and you ride them out at least until you're proven right or wrong, I think that's the way to be a winner in investing, and that's what I've tried to do. So yeah, my thesis with Tesla hasn't changed in a few years, really. I mean, the first time my thesis changed was when the growth in the car business started to plateau, and I realized that there needed to be another avenue for growth. And I believe that avenue for growth is going to be robotics and autonomous software. Now, maybe I'm wrong. Maybe they don't end up winning in either of those categories. I think they'll win in one or both. But that's the thesis now for me. And that's been the thesis for the better part of the last 3 years.
Yep. It's interesting because you are both a momentum investor, short-term investor, and then in this particular case, Tesla, you chose to go long-term. What's your answer to people who will say it's irresponsible to put your money in Tesla? Look what happened in the last 3 years. Its stock was flat. You could have taken that money and put it into another stock, let that grow. It's all about the right timing. But you kind of like, no, Tesla, I'm going to go ahead and hold it despite, no movement for several years.
Yeah, that's part of the game. And like, same thing with Amazon, which I've held for like 10 years as well. It's the same thing where, you buy a stock and it goes up a lot in like a 3 or 4 year period, and then it doesn't go up as much for a few years, where it goes down 30% and back up and down 30%. And people are like, oh, well, the story must be over. The hype must be over. Like, on and on and on. You see PR articles, margins are compressing, EPS is going down. Like, this is like an age-old story. Apple went through many phases like that. But you could argue Apple's actually entering a new phase just like that, where they have no growth. Apple's business is not growing at all, right? But that's an entirely separate conversation. My point is Amazon's been through phases like that. All the great American multi-trillion-dollar companies have been through 2-3 year periods where the stocks did nothing. In even worse scenarios, Amazon and Apple have seen years where the stocks have been down 80-90% in 1 year. Would you have held through that? I don't know. Depends on the person. Depends on your level of conviction. Some people did. Most of those people are multi or millionaires or deca millionaires, right? People that had the conviction to hold through Apple and Amazon in the early phases, like, very few people did. And the people that did, you don't hear about them often. You don't meet many people who have held Amazon stock for 35 years. Why? Because they get shaken out during the volatility. It's funny because every common everyday investor loves to quote Warren Buffett, right? He's like the hero investor, and I think well-deservedly so. Warren Buffett is a legend. He's arguably the GOAT. Peter Lynch is my GOAT, but you can pick whoever you want. The point is that these legends, people like to quote them: buy when there's blood in the streets, never sell your long-term stocks. It's really easy to say that, and in a 40% market decline, it's a lot harder to actually hold the stock, and most people sell. Most everyday people, they'll buy the stock at 220, market crashes 2.5 years later, stock falls to $1.05, and they see their money get cut in half, and they go, I can't take it anymore. If it falls any further than this, I'm out. And then 3 months later, the stock's back at $200, right? Like that. This happens over and over and over and over again. In fact, it happens to some people multiple times because they just don't learn their lesson, because fear and greed get the best of them at the market lows or market highs. But I don't know. You have to have a tremendous amount of conviction to hold stocks through periods of volatility. Some people do, some people don't, and it's just part of the game. Tesla is a great example of that. It's a very volatile stock. I mean, I think it's a little bit of a different story today than it was 10 years ago. I think you're going to probably see a lot more volatility now. It's going to be harder to unlock new magnitudes of value. If you want to unlock an additional $1 trillion of value at a $1 trillion market cap, you're going to need to do bigger things. And so from that perspective, the story has changed slightly. 5 years ago, the company didn't need to do a lot to dramatically improve the 5-year outlook for the company. Now it needs to do a lot more. And so, the bar has been raised. That's one thing that's changed. But I have confidence in them accomplishing what they need to accomplish. I mean, I think when you look at the humanoid robotics competitive outlook and you look at the companies that are involved, I would pick Tesla over the field 9 times out of 10, maybe 10 times out of 10. There's just not a lot of sophisticated competition. I mean, people point to Boston Dynamics and figure they don't have the scale. And I think what Elon's doing with XAI in the background, aggressively raising the valuation of that company in the background. I think the merger with X was smart. I think that's going to really be the brain behind all of his AI hardware and software initiatives. And he's building an ecosystem like he always does, and he's doing it rapidly. He's going to, by the end of next year, he'll have under the umbrella of his companies 3 of the 5 largest data centers in the world, indirectly or directly under the control of his companies. And so, I have confidence in Tesla. And, I had a debate about somebody with this the other day about what the narrative is for Tesla. And there's still people who are harping about the valuation. I just find that there's a fundamental misunderstanding for the people that have tried to short the stock for the last 10 years. The last 10 years, the stock's up 2,000%. It's a 20x. And there are very smart people that I know that have tried to short the stock for the last 10 years. Obviously unsuccessfully. I mean, you could have maybe tactically shorted it a few times, and if you got out perfectly, you made some money. But broadly speaking, the shorts have been obliterated on it. And the reason for that, or a big part of the reason for that, is this addiction to balance sheet analysis, this addiction to PE ratio analysis, which you look at the best performing stocks of the last 25 years, if your indicator of whether you should buy or sell was the PE ratio, you would have dramatically underperformed the market. If you were selling the stocks with high PE ratios and buying the ones with low PE ratios, you would have done terribly. And part of the reason for that is stocks have more speculative premium today than they did many decades ago, and part of that is the social media effect, right? There's a larger wealth of information available to a larger crowd of people, and so more people are, individually given the agency to make those decisions, right? Decades ago, people didn't really pick their individual stocks. They gave their money to a financial advisor. He buys a bunch of stuff. Now everyone, from your 19-year-old kid with a Robinhood account to people who traditionally would have financial advisors, now just putting their own money and managing their own money. It's a completely different environment, and speculative premium is going to be higher. And by speculative premium, what I mean is the premium that the shareholder base is willing to apply to the stock. Tesla has a high one. Palantir has a high one. Many of the best performing stocks have high speculative premium. And the reason for that is because their shareholder bases believe they are going to win next gen industry. Right? Palantir doesn't trade at 150 billion market cap because the PE ratio is attractive. It trades at that because its shareholder base believes it's going to be a generational winner in AI software. And if they are, then that bet can pay off. The same way that the Tesla shareholder base believes they're going to be a generational winner in autonomous software and in robotics. And if they are, then that bet will pay off. And so I think there's just been a lot of a disconnect, at least for the people that have missed the biggest winners of the last 10 or 15 years in the equity markets, of how to really understand why markets are valuing companies the way that they are. And yeah, it's something that's pervasive.
Yeah, very articulate. I love the way you explained everything. I wish I had Gary Black here. I wanted to, you kind of already touched on it, but Gary says, right, he exited their position. He says that the PE ratio for Tesla is at a forward PE. I guess that's 1 year forward at 100x. He said, in the history of stock market, we can't find a single $1 trillion market cap company, sorry, laughing, that traded at a forward PE of 100x. We even asked Grok. Okay, but he explains a very long post about, his definition of PE, that he does take in the present value of all future cash flows discounted. And that's his position, which is fair. That's his thinking. But do you have I wish he was here. You can,
Yeah, I mean, I've debated Gary on this several times. I mean, look, Gary's an old school institutional analyst, and old school institutional analysts just don't catch the best performing stocks. They just don't. And it's just the truth. There's a suspension of fundamental discipline that is required to understand why stocks are expensive. Like, usually stocks that are expensive for a reason, and stocks that are cheap for a reason. That is overwhelmingly true. Like, and there's going to be this retort, and I get this retort all the time. Like, okay, well, valuation always eventually matters. Yeah, duh. It matters during market crashes, but the market recovers. So yeah, if you're trying to plan some trade around an eventual market crash, are stocks like Tesla going to go down a lot and stocks like Palantir going to go down a lot during a market crash? Yes, because speculative premium gets deflated. But zoom out, okay? Zoom out. Take out the eventual market crashes every 5 to 7 years. Those are going to happen whether you want them to happen or not, okay? So just book that into your analysis in the first place. Don't be the guy that's like trying to call top on the markets. It's every 5 to 7 years, the markets are going to crash. Get over it. If you can't deal with that reality, you shouldn't be in the markets at all. So once you've made that concession and come to reality, move from that point as a base. Knowing that the markets are going to crash every 5 to 7 years, what stocks do you want to own in the meantime? The answer is the best performing stocks. I would hope so, right? I mean, I would hope the objective of everyone here is to grow your wealth and make money. That's why people invest in stocks, right? Outside of there's people that do it for causes and whatever. I mean, outside of the exceptions, most people are here to make money. And to do that, you want to be in the best stocks in between those crashes. You want to be in the best performing assets in between those crashes. And when markets recover, guess what recovers the quickest? The best performing stocks. Okay? And very rarely are those stocks cheap on a multiple basis. Very rarely do those stocks have low PEs. Very rarely are those stocks the ones that value investors point to and say, wow, that's a really attractive PE. That never happens, okay? Rarely happens, okay? And by the time that does happen, let's say you did find a stock, okay? Compelling industry, compelling PE ratio, which, by the way, you're almost never going to find. But let's say you did, hypothetically. By the time that stock gets found, its PE ratio will also swell to 80, 90, 100x. And then what? Is the stock then a sell? Probably not. That's when the exposure starts picking up, institutional coverage starts picking up, and the stocks go on parabolic runs, like Tesla did from 2019 on. When it went on a 600-700% run in a few years. That's what happens when stocks actually get mass coverage and get found and the story hits an inflection point. So yeah, I mean, if you want to spend the rest of your life as an investor saying PE ratio is too high, so I'm going to sell the stock, like, good luck. You'll be in average stocks for the most of your investing career. That's the reality. You'll be in companies that aren't in leadership position, right? Everything that's good about a company adds to the valuation. That's how you should think about valuation. You should think about valuation as a tower of proof of the fact that you're a badass company. That's what valuation is. Okay. Part of it is your leadership position in the industry. You get a little bit of valuation premium for that. Part of it is the potential of your new and future products. You get a little bit of valuation premium for that. What is the numbers that these premiums should exist at? There is no way to codify this. You know, when I always laugh when Wall Street analysts are like, the way Gary was justifying his P ratio, oh, well, I discounted all future cash flows. How do you know what the future cash flows are going to be? You have no remote idea what the future cash flow is going to be. No one knows. Okay? No one knows. People who try to project cash flows for a business on a 10-year basis, especially a new technology business where new technology is being introduced, they're just spitballing. Okay, no one knows. You could try to model it, but you're not going to get close. I can promise you this. And no one did this with Amazon. No one did this successfully with Apple. No one did this successfully with any number of juggernaut companies you can name. CrowdStrike, any industry you want to pick. No one has ever successfully modeled revenues and cash flows on a 10-year basis with any sort of meaningful accuracy. So ignore it. Okay? If you believe that the company is going to win in future industries and the value of those future industries will be worth more than the value of the company today, then you invest in it. That's it. That's the guiding principle. And, you know, are there going to be periods in between where margins compress, valuations get high or valuations get low? Yes. Will the stocks with high valuations go down more during market corrections than the stocks with low valuations? Yes. Will those stocks be more volatile on a day-to-day basis than stocks with low or cheap valuations? Yes, but you have to accept all of these things if you want to invest in those types of companies. If you don't, then go be an oil and gas investor or be an industrial mechanics investor or be an aerospace and defense investor. Those are low beta industries. There's not a lot of unpredictability there. You can model out the cash flows on a 5-year basis. You can look at backlogs and contracts and codify those businesses. You cannot do that with technology businesses because the future potential growth of technology is a big question mark. No one knows how quickly things are going to proliferate. You know, think about the cell phone era replacing the landline. Think about the automobile replacing the horse. Like, these things happened in the blink of an eye, much faster than anyone thought they were going to happen. In 5, 10 years, landlines were gone. No one has a fucking landline anymore. You go back to the 1905. By 1930, not everyone had a car, but every middle-class person had the ability to buy a car. By the 1950s, you were talking about major road systems in most parts of America. Like, in 50 years, we went from everybody riding a horse to everybody driving a car and roads and gas stations everywhere. Like, that's not a lot of time to transform the national economy. And, you know, now we have even better tools to do it. So, yeah, Tesla's a leadership company in two of the most important industries that are coming around the corner, which are robotics and autonomous software. If that's not a good enough thesis for you, then short the stock, you know?
Amen. Amen. You have to frame this, Herbert. This was the best speech for
mic drop.
ages. Thank you so much.
I do think that you spoke for a good segment of people, including myself, in terms of how we think of Tesla stock. There's on one side people like it's traditional analysts who say that you don't give any credence at all. Don't give any amount of stock price today, present value, to anything that is vaporware. Even today, autopilot is not existing until Tesla sells it. He gives the opportunity for human and robots to be 1 million robots in total, because that's how many industrial robots there are right now. That's the way he calculates things. So that's why, even though he will tell you, I have taken discounted cash flow since 2030 and on and down to today, it's tiny little numbers. And so it doesn't really, it's not very insignificant. Now, there's other people who will do discounted cash flow analysis. And I love the way you said that, yes, you're guessing. However, what you can do is probabilities, right? We don't know what it is going to be. So what you should do, I think, is you can say, okay, there's a 5% probability it'll be this kind of trajectory. It'll be 10% this way. Again, you're guessing, but at least it gives you some sort of guardrails. And you don't need to do that because, like you said, this is so transformative, so disruptive of an industry that's going to change. If you believe that that's going to happen in whatever market you're playing in, then it's like it's so disruptive, so transformative that it's going to be so big. It doesn't matter at that point whether or not you're just going to be a 2x or you're going to be a 10x or whatever it is, right? But it's going to be a big number. And it's hard to know, like you said, because anytime a disruption happens, no one can predict. I mean, I don't know how many people predicted that Uber was going to come out of, or, you know, the iPhone invention. The App Store was going to be the thing that generates all the top companies we know of that wouldn't have existed if it wasn't for the App Store, right? They would guess things differently about when it happened.
Yeah, none of us know. All we know is that technology always wins. That we do know, right? Like, I was talking about this on our space earlier today, but what technology really is, and I don't mean technology just in terms of like tech companies. I mean technology broadly. Technology is the promise of efficiency. That's what it is in its heart. It's a promise to make something more efficient, or I guess technically speaking, especially in the modern era, either more efficient or more convenient. Ideally both. Sometimes more efficient means more convenient, but not always. But that's the goal. And overwhelmingly, it always wins. Like there's always skeptics. Every single time there's skeptics. Right, like I just brought up I always love the horse and automobile example because it's the most glaring and shocking one. But you go type in 1905 articles about the automobile, you'll see articles that are saying like, "This will never work. You need a gas station on every corner. You know, you need a road. You need millions of roads. You need a highway system. Like all these things that end up happening, right? That they're like, oh, it'll never work. It needs too much investment. Blah blah blah. Same thing with the cell phone and landlines. People were like, oh, people will never not want to have a phone in their house. Like I remember my mom, even when that transition was happening, my mom was like, oh, we'll always have a phone in the house. Like I can't imagine not having a phone, right? And within 2 years, there was no phone in the house, right? So it's like these things start slow. And what I always say is it's easy to be a skeptic. You know, people think it's easy to be it's easy to be a skeptic on these things. It's easy to say it's a new technology, like, you know how much money it's going to require to really get to scale, like how much production and development, like that's what everyone says. Everyone, like not everyone, but the skeptics say that at the start of every major technology trend, and time after time after time, the technology proliferates. Right? It just always proliferates because it promises efficiency. The people who decide the winners are the capital allocators. That's who decides the winners, both in politics and in the business world. And the capital allocators care about one thing, and that is efficiency. And both of the technology super trends that Tesla is involved in are both promises of efficiency. Autonomous driving would drive enormous efficiencies across the transport chain. We talk about consumer transport, but the commercial transport opportunity is enormous. You know, autonomous boats, autonomous trucks, autonomous planes, like the GDP impact is unimaginable. You know, we tend to limit it to like this Uber and robotaxi conversation, which is also a huge multi-trillion-dollar opportunity. But the overall idea of being able to autonomously operate large vehicles, especially in an industrial or commercial capacity, is an insane potential advantage for industry. So that's one thing. And robotics, I mean, that goes without saying, right? The efficiencies that robotics offer in terms of margin advantages, in terms of overall production costs, in terms of the ability to autonomously operate factories and warehouses. So the opportunities are obvious, or they should be obvious, I think, to anyone willing to imagine a little bit.
Is it fair to say that some people who are investors in Tesla, they're really value investors, not innovation company investors or tech
I guess
investors?
It depends on the way you characterize that phrase. I mean, typically value investor refers to people who are looking for companies that are trading cheap on a multiple basis in a neglected industry. So I wouldn't characterize them as traditional value investors, But could you characterize them as value investors in the sense that they see value in the company? Sure. I mean, but
no, that they want to see earnings. They want to see earnings growth. They want to see margins.
Oh, you're talking about the displeased ones.
Yeah, well, whenever I see somebody talk about Teslas in some ways, I sometimes I think to myself, you're really not a person that should be investing in Tesla. This is not the game for you. You should really be picking other companies because at the end of your heart, you're a value investor.
Yeah, if you care about margin compression on a core business that is looking to pivot to new businesses, then yeah, it's not the right stock for you. I mean, that's something that's going to happen. You know, I can't think of a business that's made a pivot like this at this scale that hasn't seen margin compression. It's pretty inevitable. And there's also been a slowdown in like overall velocity of growth in electric vehicles in general. So that's part of a headwind too. Like it's not uniquely a Tesla problem. And this is this is partially why people cannot see it through to the end of these mega trends, because they can't stomach the natural volatility of the trend in between, right? They can't stomach the idea that, like, hey, you know, maybe electric vehicles aren't going to grow to 50% CAGR annually for Tesla. Okay, like there are other opportunities that can be seized in the meanwhile, that can offer that level of growth. And that's what Tesla's trying to do. Like Elon is trying to pivot this company into a robotics and autonomous software company. And if he is successful, I think it will pay dividends. I think the margins of the company will be dramatically higher. You know, and keep in mind the background, the energy business is still doing very well. And energy storage is positioned to continue to do really well, especially now that it's been recognized as a pretty vital backup for a lot of these data centers. You know, when XAI put in those Tesla power walls at their facility, now a bunch of other data center facilities are starting to do that too. So they have a lot of underrated tailwinds in the energy business too.
So we've got Hamid. I think I'd be curious to see where you stand because you're a Tesla bull, but for a couple. Last time I talked to you was over a year and a half ago. You're much more realistic. You're much more caring. You're bearish for at least a period. Where are you today?
I think that accurately captures my position, which is I'm a Tesla bull long term, but short term, I do think that the valuation is rich, right? Like it's kind of hard to justify the short term valuations with declining revenues, declining margins, declining profits, and no revenue growth in sight for 2026 and possibly for 2027, because the expectation was that we were going to get new lower priced vehicles by late last year, then early first half of this year. Even in the first half of this year, in January, February, it was pretty obvious that there wasn't going to be lower cost vehicles, different models that were going to be released this year, and people were still arguing, no, it's coming. I mean, it's going to happen because he said that it will. But I think when you look at it realistically, 2026 is not going to have revenue growth. 2027 might, but the numbers will be relatively small, sub 10% revenue growth. And my skepticism in terms of stock price is oftentimes that, how patient is Wall Street going to be, right? Because Wall Street tends to be quarterly oriented, and misses on quarterly numbers cause huge swings, which is why we've seen Tesla for 4 years now trade at between this $100 to $400 price range. And it literally hit the $400 price range 4 years ago. And it hasn't broken past that in any significant way for 4 years. And, these are same type of arguments that I was having with people 2-3 years ago. But, when you fast forward sort of like beyond the next couple of years, so if we go into 2027, 2028, where you now have substantial robotaxi growth, Optimus is starting to ship in decent numbers to where it actually can make a dent in revenue numbers, and EVs resume their adoption rate, which all expectations of mine is that in the next 10 years, more than 90% of vehicles are going to be EVs. So when all of that happens, then now all of a sudden you get back to 50% revenue growth for Tesla, and it's going to go all of a sudden in 2027, 2028 to 150, then 200 billion in revenue, and at that time it'll be much easier to justify a $2 trillion valuation, which is roughly 10 times revenues, which if you had 200 billion in revenue. So, once you get that revenue growth back is when I suspect that it'll be a great investment. In the meantime, there's other opportunities, like Stock Talk was saying, that there's other companies that are doing really well. And in the past 4 years, if you were sitting on Tesla, it's quite possible that you may have missed out on some of these other opportunities. So that's kind of my viewpoint on that.
Gotcha. So, Hamid, even though we're at the brink of autonomy, you're saying that the impact to the earnings is not going to happen until late next year, or maybe even just a small bit, 2027. So you're still going to hold, not go all in on Tesla yet until these things show up.
Yeah, so the brink of autonomy just means that they're going to have tests in June, and they're going to go well. And in by the end of this year, they might have a single-digit thousands of vehicles, which would be an incredible accomplishment, by the way. but single-digit thousands of vehicles is not going to contribute to revenue and profits. That's just like just look at Waymo, right? Like it's not contributing to revenues and profits of Google. It's just not going to happen. 2026, it has an opportunity to maybe contribute 2 or 3 billion, maybe 5 billion if they're really lucky, to revenues, and let's say $1 billion to profits at 20% net profit margin. But again, for a company that already has $100 billion in revenue, that's a 5% revenue growth, and $1 billion in profit is
So you're waiting for the actual earnings upon earnings growth, which Søren Basher did a few analysis, and he says that that could show up in the second half of next year. Then others will say, right? So some people, just like when NVIDIA stock, people started to really make that stock jump after they saw quarter upon quarter earnings growth. That won't happen for Tesla till the second half of next year. But some people will say, yeah, but investors get ahead of it. You're not one of those. You'll wait until they actually see it.
Well, what I would argue is that investors have gotten ahead of it on Tesla in particular, whereas they hadn't on NVIDIA. And but yeah, you're right in that, like, they might get ahead of it far more, just in anticipation. But I would say that Tesla investors have already made Tesla ahead of it, meaning like it has last I checked, it had roughly a $1.2 trillion market cap. So if you value Tesla as just a pure car company, it should have roughly a $200 billion market cap, right? So the other $1 trillion is in anticipation of all the other stuff that Tesla is doing: energy, software, FSD, robotaxis, and robotics. So it's getting $1 trillion valuation for 4 or 5 businesses that are essentially startups, but with incredible capabilities and Elon Musk and manufacturing facilities behind them, which might be justified, but the results are not going to come for a little while.
Okay, great points. Anybody want to say anything different? Stock Talk. Welcome, Sawyer. Omar, Alexandra. Yeah, go ahead, Omar.
Yeah, I mean, it's interesting to talk about valuation, and I think Stock Talk made a great point, which is there's a reason stocks are valued highly and a reason stocks are cheap. If you go out and read a copy of The Intelligent Investor and say, hey, look at Amazon, the P ratio is so high, I better stay away from that one. That one's a bad value. And hey, look at this company. Well, this company's trading below the book value. This company has more cash on its balance sheet than the market cap. Well, it probably has significant liabilities or is a fraud or something that, the equity may end up being worth nothing, right? So you can't just sort of look at the number. You have to actually understand the number from first principles. So what are we buying when we buy a business? we're buying the earnings the business generates, right? So I can go and look at the PE ratio today, or I can say, well, what's the PE ratio going to be next year if the earnings grow? So to kind of look at Tesla and say, well, the margins are compressing, the earnings are down a little bit, so the multiple is higher as a result, and therefore, the future earnings from autonomy, from Optimus, from maybe some of these new car models is, should be discounted. It doesn't really follow, right? You're buying the future earnings of the business. You're not buying the past earnings of the business. So is it troubling to see margins compress, to see this sort of situation in the auto business where the growth is slowing? Yes, but ultimately, when investors are looking forward, it's sort of neither here nor there. I mean, ultimately, what you're seeing in the EV market, where there's a ton of players, a lot of them are subsidizing their entrance into the EV markets, right? Very few of these EVs are making money. You're seeing tons of brands, new brands in China trying to make a name for themselves, even smartphone brands getting in. And it's created this situation of intense competition, but you're also seeing a supply chain built out in EVs for the first time. You're seeing a battery sector built out for the first time. So I think the investors who have been in the EV theme for a decade plus at this point are taking a very long-term view on it. This isn't about 2024 earnings or 2025 earnings or even 2026 earnings for auto. Auto has been around for 100 years. People have been selling cars and making money selling cars for a long time. The most important thing here is, I think, the rate at which EVs displace combustion engines. And that really is the primary threat, especially as we've seen growth kind of slow. But you look at the overall picture, you look at the overall industry, minus Tesla, things are actually looking pretty healthy. You're seeing pretty strong growth. You're seeing chargers built out. You're seeing supply chains built out. You're seeing countries like Mexico and South America start to get EVs from companies like BYD. And this ultimately is expanding the TAM for the EV market and bringing that in faster. So if I have to accept a little bit less margin on my car and I'm in a sort of competitive environment, ultimately, I think that's probably better for Tesla's 2030 earnings than a situation where they're kind of at it alone, but are able to enjoy, the 30% margins they had at their height. So that's how I think a lot of investors are looking at it. Yes, the multiple's higher because the earnings are down, but this is ultimately supporting, I think, a faster build out of EVs. And really, as we look at the future earnings, not what's the trailing PE today, but what are people going to be looking at in 12 months or 24 months or 36 months? That's really going to be a function of what we're seeing trialed in Austin more than anything you can extrapolate from looking at the last 12 months of auto sales or even projections of the next 12 months of auto sales.
Is it possible to be everybody's correct? That there's not like one person's right, one person's wrong. So I mean, is it true that you're basically saying, look, I see this Tesla, I'm a bull, I see it succeeding. I'm just trying to time it a little bit of knowing when to pile in a bit, and I don't see it happening until earnings sequential growth next year. And so in the meantime, it is valued already. These potentials for these robots and all that. Other people are saying, look, I'm just picking a company that's going to win these massive markets. Stock Talk says that Tesla's in 2 markets. I see 5, and they happen to be the largest markets that are out there. And each one of them, they're progressing and they're inventing something new. And we're basically seeing it being proven in front of our eyes. That's my thesis. And when it happens, but my time frame and your time frame might be different. So maybe we're both right,
Yeah.
That's exactly.
Yeah, I would agree. Sorry, I would agree with that. I think, and in fact, I agree with almost everything that Holmar said. It's just that there is some valuation at which I feel like the stock price has gotten ahead of its current performance, if you will. 5 years ago, I put out a video talking about how I believe that Tesla will be the most valuable company in the world in roughly 10 years, or within the next 10 years. And within like 6 months of putting out that video, like Tesla's valuation quadrupled, and then within 6 more months, it quadrupled again. And by 2021, I was saying, okay, I think the valuation of Tesla has gotten ahead of itself, right? Like, and I think that my perspective is that there is a valuation at which maybe that valuation for you is $5 trillion. I don't know, but there is some number that even for you, it would be like, I know Tesla is going to be the biggest company in the world someday, but if it had a $10 trillion valuation today, that might be too risky for me to be investing in it at today's valuation, right? And that's the way sort of like I'm looking at it. And I'm not thinking of it as like the car business has to grow 50% annually in order for me to be interested in Tesla. But the car business, just to be frank and straightforward and acknowledge the reality of the situation, was expected to grow in 2024 and 2025, and it hasn't. And Cybertruck was expected to be the best-selling truck. That was my expectation for sure, and it hasn't materialized. So the car business just literally the growth of the car business screeched to a halt, and it does not look like it's going to grow even in 2026 based on current numbers. So current trends rather. We might be able to maintain this level, $100 billion of car sales, but chances are car business is not going to grow from here in 2026. But autonomous business might, and it might start having single digit billions in revenue, which is an incredible accomplishment, by the way. But the contribution to revenue growth is not going to be significant. So I feel like there's going to be more opportunities for investment in Tesla in the coming year, let's say. But who knows? At some valuation, I'll hop back in, and at some valuation, I think it's just too high or too risky, or there's better opportunities out there.
Well, I mean, I think expectations that they won't grow. If people are saying, well, I think autonomy will be okay, but the vehicle business, I think if they are able to deliver autonomy onto their Model Y, that vehicle is going to sell pretty well around the world. I think it'll sell well in China and the US and Europe to the extent that it's available. But, Hamid does have a point, which is Tesla has been priced for many years to win autonomy, right? So at this point, they have to win autonomy, right? How do you support a valuation over $1 trillion if they're not a major player in autonomy? And really, it just comes down to before they actually have real robo-taxis on the road, a valuation north of 1.5 to 2 trillion is not really realistic, right? It's hard for investors to swallow that on a business that feels like, well, is it real? Is it not real? We can't see it. The moment that you start to actually deploy these vehicles in the real world, have something you can point to, revenue you can show, I think that changes. And if Tesla's successful in, robotaxi alone, let alone Optimus or other applications of their AI, then I think it becomes a multi-trillion-dollar giant of the Mag 7. So that's really kind of what it hinges on. And I think you have to understand Hamid's point if you're getting in at this valuation, if you're getting in over $1 trillion valuation, you have to understand that the expectations that are baked in there, if they just do good, the stock could still come down. They're really priced for, phenomenal performance. And then maybe with Optimus and things like that people have a hard time kind of baking in because they're too far off. Maybe you get some additional upside in there. But yeah, I think it really just comes down to it's hard to justify a valuation of 2 trillion when there are no robotaxis on the road. With robotaxi actually scaling, with that growth playing out, with that growth feeding back into the auto business and in the energy business and the charging business, the valuation that I think, or the premium people will pay, could get eye-popping under these conditions. I mean, to be honest, the stock has held up amazingly well despite very weak auto growth. And I think it's a testament to just sort of the belief of the market that they are actually in a position to dominate in the autonomous space.
I believe that, by the way. I think that they are going to dominate in robotaxis. And that was my reason for exiting Uber completely. But ironically, Uber, I think, is going to have its best 3 years, just like BlackBerry did in 2009 to 2011. Yep. Yeah, exactly. Blockbuster had its best years before Netflix.
Highest revenue, highest margins when Netflix hit 5%, and then it just kept going for 3 years, and then it crashed. As soon as Netflix hits 15%, then that crashed. So that's the way it's going to work.
You know, it's actually kind of a myth that Netflix was behind Blockbuster's demise. They were just actually kind of shitty at running their company.
Yeah, it was they overloaded on real estate, and the asset just got too heavy on them. Yeah, took too much cash from them.
I think the Tesla valuation story is much simpler even than it's being presented, to be honest. I think in the modern era of democratized stocks where everyone has access to a brokerage, I think there's always going to be a handful of stocks, 5, 10 stocks, that are highly liquid, that don't function as tickers representing a business as much as they function as call options on a theme or call options on an idea. And I think there's a few stocks like this on the market today. I think Palantir is an example. I think Tesla's an example. I think maybe even to an extent NVIDIA is an example, where people want to own the theme. They want to own the thing, and they usually have a company in mind that's going to be the winner of that theme or that thing. And I think the way Tesla is perceived by the market or its shareholder base is that it's a call option not only on humanoid robotics and on autonomy, but on Elon Musk himself. You know, the greatest innovator of our time, the person that time after time again has made impossible technologies work. It's a call option on Elon. It's a majority of his wealth. Well, pretty soon, if XAI's valuation keeps going up, then XAI and SpaceX, his stakes will be worth almost as much. But it's a call option on him. And I view the valuation as a product of the number of people that are interested in owning that call option. That, I think, is a more productive way to think about speculative valuations. And I think when you think about them that way, then it's easier to come to terms with what they're worth. Like, Hamid and Omar are both right. On a fundamental basis, the stock is disgustingly overvalued. But it's not trading on a fundamental basis. It's trading on the idea that it will be the winner in these industries. And people assign that some level of value, and X amount of people want to own that call option. And that to me is what brings the valuation to what it is. I don't think it's a product of anyone forwarding out future cash flows. Like, I'm sorry, I wish Gary was here so I could have this debate with him personally, but I think that's ridiculously silly to try to model out what the cash flows will be like on these brand new types of businesses that no one has any idea how they're going to function at scale. So yeah. And also, I mean, this might be an unpopular opinion, but I think robotics are a bigger opportunity than autonomy from a market.
Oh, exactly. And it might actually show up earlier. So, Hamid, I know you're a professional trader, investor. You actually own a company that, a software company that tracks and helps people track their portfolio. You follow the market daily. You will be successful. I want to just make sure people, general investors out there, though, we did a show with Cern Basher, and he tracked Tesla stock since IPO. It was only 42 days where the entire gains of Tesla showed up. If you missed any one of these 42 days in entire whatever years since 2010, right, 15 plus years of existence, you would have missed the jump. And the jump, of course, was 2,000 plus whatever, 4,000 plus. I can't remember the exact number, but it's obviously one of the most successful companies out there ever. So for general investors, you don't know when. you can say, oh, I think that I won't see sequential earnings growth until end of 2026, 2027. I'm going to invest in other things before then. That's fair. And I think you'll be successful, but the vast majority of people may not be. And if they just hold and just suffer through this next 2 years, their returns could be better than anybody else's at the end of the day.
You don't have to only invest in one thing, though.
Yes. Yeah.
You don't have to be. I know some people are all in, and that's okay too. I'm not knocking people who are all in on something that you believe in. That's great. You don't have to only invest in one thing. If you're one of those people that's nervous, like, oh, I don't know if this will pan out the way I think it's going to pan out, that's okay. You can buy I own plenty of other stocks. You can understand that there's going to be some stocks in your portfolio that are more binary bets than others. There's going to be some stocks in your portfolio that might take years to pan out instead of months or a year. That's part of the game. That's part of building a portfolio. You don't have to feel like I can only own this, and if I don't want to own this, then I have to buy something else. Or, if this isn't at the perfect valuation at any given time, I have to sell all of it and buy something else. It's kind of a silly way to think about investing. You don't have to only own one thing.
I think to Herbert's point, I do agree that timing the market is not a good idea, and just generally timing any given company or stock is probably not a great idea. So fundamentally, I agree with your point, Herbert, and if you own Tesla, I would just plan on holding on to it for a long term, and 5 years plus, I think you'll have a great outcome. In my opinion, unless something pretty drastic happens, if Elon steps down or there's some other sort of major issues, Tesla's future is pretty bright. So yes, you just have to have patience, but. Ironically, in the investment world, because you can exit any position at any given moment, patience is something that investors in general lack. I'm actually a pretty patient person. I held Tesla from 2015 to 2021, 22 is when I exited most of my position, and then the remainder late last year. But during the time that between 2015 and 2019, the end of 2019, there were countless number of times where Tesla was predicted to go bankrupt, or FUD was created, or just misses on quarterly revenues and earnings. And back then, Tesla was crushing it every quarter compared to the previous year. Their revenues were growing at 50 to 100% every year. It was just pretty ridiculous. So what I'm saying is that, and back then the valuation of the company was roughly 2 times revenues, and today it's roughly 12 times revenues. And so there's a lot more baked in, right? The people who have done really well in Tesla have a lot of loyalty to this company, and therefore have helped raise the valuation of this company pretty significantly, and others have jumped in as well. So there's a lot of baked in expectation, as Omar already said. It has to really nail it, and I think it will. It's just it might take some time. So could the stock price hit $200 again, or be in the low 200s again? I think that's a very realistic possibility, as they might miss this quarter's numbers or next quarter's numbers or whatever. So as long as you're an investor with those expectations that, hey, this investment might have in value before it eventually rises and becomes the most valuable company in the world, which I still believe it will, then you're good. You're golden.
Great conversation. Hey, Sawyer, I just wanted to welcome you. Thank you for joining us. Any thoughts, son? We were talking stock. At the beginning, we talked about Elon's involvement with politics, and of course, his post today, and all the things that are still happening. You keep track of that quite well. Anything you want to talk about?
Yeah, Elon's ability to continuously entertain us is unmatched. It's incredible.
Yeah.
Just when you think things are getting boring, here comes Elon criticizing the Republicans for passing the spending bill. It's amazing. Never a boring day with that guy.
Yeah.
But on the robotaxi front, everyone I think covered it really well. I think ultimately people are just going to open their eyes once they start riding in these things. it's going to be a small fleet of 10 initially, but if things go well, I think it'll expand really quickly. Curious to see how they do the actual rollout. Will it be invite only? They probably won't charge, would be my guess. They'll probably just be free, because why charge? I think only 10 robotaxis would generate maybe $1 million a month. Like, at that point, who cares? Just charge for free. Just charge nothing. But yeah, I agree with Hamid, though. I think it's going to be a tough year. I don't think we're going to see growth this year. I think short term, the car business definitely bearish on that. I think as we head into the second half of 26 into 27, I think that's when we'll start to see growth pick back up, specifically with the Cybercab launching, obviously the robotaxi business expanding. But we also have the Tesla Semi, coming online around that time, or volume production around that. So I think there's a lot to look forward to. It's just a matter of being patient and waiting for these things to play out.
Mm-hmm. Okay. Yeah. Oh, I think we lost Hamid. And no, thank you guys very much. I think we're going to resume again next week. Really appreciate you, Omar, Alexandra. We had Larry at the beginning there, and Stock Talk, and Hamid and Sawyer. Thank you guys. That was an amazing conversation about the stock, and everybody had very good points. Thanks, everyone. We'll see you guys next week.